Welcome back to EG Financials. Today we're looking at the Case-Shiller Home Price Index. We'll be looking at year over year and month over month. Before I get started, I do want to share this website that I use often. I look at it every day, multiple times a day. It's a great website to save on your tools bar as a favorite, and it's just tradingeconomics.com. It shows you all the economic reports that come out daily, monthly. It's a great way to keep track of it, and it shows you what expectations are and then what the actual results are that come out. So we'll start off by looking at the summary view and then we'll click into the year over year view. So here we can see that the expectations for the Case-Shiller Home Price Index year over year was a decrease of 1.6%. Actual came in at a negative 1.1%. And then month over month expectations was an increase of 0.4%. Actual was an increase of 1.5%. Okay, so let's go ahead and click into the year over year report. And here we have the graph. And we can see that negative 1.1% that came in for March results. There are multiple Case-Shiller reports that get tracked. Make sure you're aware of which one you're looking at. And again, this is the 20 city home price index. Okay, let's get some details behind these numbers. So the index in the US fell 1.1% year over year, as we saw the first decline since May 2012, and compared to forecasts of a 1.6% drop. Cities that saw the biggest declines were Seattle at 12.4% year over year, San Francisco 11.2% year over year, and San Diego saw a 5.3% decline year over year. Cities with increases in their prices were Miami 7.7% year over year, Tampa 4.8% year over year, and Charlotte 4.7% year over year. And the real estate market is facing many challenges. And some of the headwinds mentioned by certain economists include the mortgage rates and the continuing possibility of economic weakness. Next, let's go over to Realtor.com to see an article that they put out this morning. So here they're looking at the Case-Shiller National Index, and that is the gray line that we can see where it actually increased 0.7% year over year on a national basis. And they're comparing it to the median listing price year over year. So we can see that they're trending in the same direction. They've been coming down for the last few months. And they noted that investors are keeping a close eye on debt ceiling negotiations as well as the potential outcome of the upcoming FOMC meeting, both of which have the potential to push interest rates higher. Meanwhile, though still above the target level, inflation is slowing and the unemployment rate is at its lowest level since summer of 1969. Easing inflation, a strong job market, and cooling home price growth offers some optimism to home shoppers who have been plagued with high costs over the last few years. The housing market is somewhat gridlocked as still high housing costs and low inventory levels mean buyers face budget challenges as well as competition for the limited fresh listings on the market, leading to upward pressure on prices. All right, and that's it for today. Make sure to follow for more updates.